All right, guten Morgen. Welcome to QuantBox Live, where we get our global macro on. It is 6:38 on Wall Street, 3 hours before the open of trading. Today, we're going to look at fundamental analysis. Yeah. So yesterday, I went through, I think, about a dozen reports from probably 8 different government agencies around the world. And boy, is that difficult work. And then you just get PDFs or web pages. Sometimes you get Excel spreadsheets. And then what do you have to do? You have to organize all these thoughts and then remember them. It's too difficult. I did that for years. It's just too difficult, too time consuming. But the biggest thing is you just make mistakes. You don't update. You put in the wrong decimal point, whatever. But anyways, the better way to do it, the smart way to do it, is automate the whole thing with artificial intelligence so that we can, right, analyze sentiment, inflation, employment, GDP, technical trends, open trade positionings, seasonality for every asset class that we want to trade in real time. Wow. All you have to do is have millions of candlestick data and log into all kinds of government agencies around the world and pull all their data from their database into your database. Yeah. Wow. Actually, that is kind of tricky. Takes a lot of programming skills. And then when you have all that, it's just numbers. It's just imagine you had 500 spreadsheets. What is that? That doesn't help you much, right? Or one spreadsheet with 500 different worksheets in it, right? You're like, well, that doesn't help much. So you got to organize your thoughts. And so, anyways, that's what QuantBox does. It allows you, as let's say, an independent retail trader, to trade like you're $1 billion hedge fund, except you don't have to hire a quant for hundreds of thousands of dollars a year. You don't have to pay for Bloomberg, which is $1,000 a month. And you get things like organization to your thought process: strong buy, neutral, sell, strong sell. Or you look at the commitment of traders report. Awesome, which tracks the position of institutional investors, but the flow of the capital from one asset to another. You can look at retail versus institutional positioning. Look, retail's heavy long here and heavy short there. Very cool information. Yeah. Anyways, the trial's $8. We have a big meeting tomorrow. I'm gonna see if I can log into this. YouTube.com/ at QuantBox, I believe it is. Okay, we have a big all hands meeting tomorrow. And I got to get you a secret link because it's a private meeting for QuantBoxers. But if you were a QuantBox subscriber at one time, if you're currently a subscriber, if you're monthly, if you're annual, you should be here. Oh, I keep clicking the wrong button. Where is the link? It's complicated. All right, here it is. Here is the link. So tomorrow, in 29 hours, tomorrow at noon Eastern time, all hands meeting for anyone that was, is, has been, wants to be a subscriber of QuantBox. I have a big meeting and lots of amazing information I want to share with you. And then I have an amazing question for you to ponder. Now, for the future direction that we can take. So anyways, big all hands meeting. I'm going to get an email out to you, but I want to make sure you got that here. And of course, know about it. All right, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. So in regards to this call to action, click the link, Go to this and get the notify me. Okay. It's unlisted. You're not going to be able to find it manually. All right. Let's log in. Let's go, yo. And Jim says I already got some likes on there. Nice. Not bad for a private. Well, I appreciate the loyalty. All right. I am smiling ear to ear. We have the 10-year yield down to 4.44. Good. Remember, that means the treasury market is rising, otherwise known as the bond market. The bond market is rising. That's good. That's what we wanted. And, lucky me, I seem to have caught it at to the bottom, actually, almost to the day, I think. So, lucky. Good analysis behind it. Thank you, QuantBox. But as far as timing, pretty good, actually. So I like this coming down. This is good because mine pays basically 5.0. I don't know the exact yield, but mine pays 5. And if you get a new fresh cut 10-year T note today, it'll pay you 4.44. Which one would you rather have? Well, you'd rather earn 5% every day for the next, or every year for the next 10 years. So mine is worth more. That's how that works. Someone would pay more for mine because I get 5% a year. So, anyways, cool. Right on. Okay. Oil having a hesitation. What we did is we rallied up to 80, and then people said, oh, not so sure. Psychologically important, that 80 number. So it's down right now. Gold trying to get back to 2000. Yeah, maybe a little bit of aggregate demand. Definitely not an inflation hedge. Okay. S&P 500, big day yesterday. Okay. S&P 500 up 2%, but holy smokes, mid cap stocks were up 5%. Sorry for the slurping. Okay. Hey, euro dollar, we were stuck at like 106, 107, 106, 107, 106, 107. Boom, 108 and a half. Nice. Well, breakout. And Bitcoin looks like nothing happened. It's like, riding a roller coaster. You start and end at the same spot, but boy, it was an interesting ride in between, right? Cool. But as you can see here, everything around the world is up. Look how low the British stock market is, right? The FTSE relative to everybody else. It's actually down for the year. Oh, snap. Huh? Down for the year. Cray. Look at the difference. I mean, it's just extraordinary, right? So anywho, everything has been generally up. Japanese stock market a little flat recently compared to American stock markets. Take a look at our gauges. Okay. They were risk on yesterday and now a little cooling off period. I'll show you why. It's technical, it's not fundamental. But so anyways, slight cool off over the last 12 hours. We look out to the monthly risk on. Okay, stock, right? The S&P 500 way up, VIX way down. Okay. Some money going into gold. It's negative here, but it's actually sort of an aggregate demand thing. Okay, dollar index down, good. Yields are down. Good. Okay. Yen is flat. Flat. Okay. Anyways, take a look at the scatter plot. What's moving? Okay. Remember 24 hours ago, we were looking at this. And if you recall, S&P 500 was down here, and we're like, yep, it's going to move to this side. Because part of our analysis and part of the power of QuantBox, we were able to predict that inflation was going to be lower than expected, and it came out lower than expected, which is great because yesterday in the day trading group, when we logged in at 4 o'clock to do the day trading group, I think it was CNBC running, and all the experts at the end of the day were like, that was unexpected. Like, oh, that was a surprise. I'm like, nice. Now they're going to be surprised when inflation goes back up. So we'll see if it does. Anywho, lots of things over here, and okay, bullish and expected. QuantBox is saying even Kiwi dollars up. Unexpected. So anywho, everything seems to be right as rains. Bitcoin down, right, a bit. Look, we got a little bit of CAD action here, a little bit of CAD action there. It's really neutral though. Look how small these moves are. Plus or minus 0.2, 0.2%. No big deal. So I guess the news today will, well, speaking about news, we have retail sales. There's PPI, but I don't care about PPI anymore. If in a disinflationary market, it doesn't matter, but retail sales does. Retail sales are going to be low. Why is that? Well, it's priced in dollars, and right, inflation's falling. But anyways, we'll see. You need less dollars. If prices are falling, you need less dollars to buy the same stuff as last month. You see? So, anyways, but ultimately, the bigger news is whether any of this stuff continues up. And I'll show you the risks of that. I'm going to just skip sort of everything else. Let's just go right into technicals. Let me do like dollar pairs as an example. Okay. Here's Aussie dollar. And the risk today is that we're done. We have a cluster, three clusters really: monthly extreme top, weekly conservative top, and then price action double top. Would you buy here? I wouldn't. Could a bull take profit here? Uh-huh. Could a bear sell here? Yep. So that's a problem. That may hold up the market. Okay. We can look at euro dollar. Okay. And just gone. Huh? Gone, girl. Gone. Okay. But luckily fits our trade plan. Boy, that looks good now, though, doesn't it? Hey, I drew that a week ago. So now what? Well, pretty elevated. We're a long ways away from the 4-hour 21. We might try to ride the 4-hour 5, but the air is thin up there. It's going to be hard to breathe and climb to the next level. R3 typically is my always out price. So maybe you get just one more and then a reasonable pullback. I don't know. I mean, that's the thing. I don't know. We had our move. Okay. Adding more now is the harder risk. It's like people tend to be aggressive at the wrong time. Like they're not aggressively buying a breakout strategy. but now they want to buy up here. It's the wrong time to be aggressive. So, anyways, yeah, maybe ride a 4 hour five. I don't know if I even care about it that much. You want to ride the 4 hour 21. You want to look at role reversals. So it's vulnerable, but it can go up from here. Really depends on what the other things do. And this is why we want to look at all the technicals. Okay. Kitty cat regaining some. Yeah, it seems fine. Seems fine. It's not a great chart, but at least US dollar weakness, right? So, you know, and commodities trying to go back up again. So maybe you can get down here. So the ultimate target technically is getting us down here. Okay. Weekly S2, monthly M1. That's pretty reasonable. This predicts that. This isn't really supposed to happen. Okay. And then this is not great. But then if we now look at a weekly plan, M3 predicts M1. And then I have this thing I call an Arctic turtle. Very mysterious. And the Arctic turtle is when you have two targets, there's your weekly, there's your monthly target. What'll happen is investors will stretch out to this one and then everyone gets out. So even though you would think M3 to M1, in this scenario, you might want to hang on to here and then it'll all come back. Everyone will take profit. Right? Why an Arctic turtle? Well, it sticks its neck out and then chop, gets it chopped off. And it's quick. Okay. Kiwi, you can have it. Forget it. Yen. Very interesting because we've talked about this a lot. And this could be a serious change. Because seasonally, if the US dollar weakens right now, it should weaken for like, let's say, generally speaking, for the next 6 weeks, not just the next 6 hours. And, I don't know, like, could we do one of these now under that circumstance? Yeah. Yeah. Be interesting. Do I want to trade this down? No, no, because, this is QuantBox, right? So, quant boxers use fundamental analysis of macroeconomic data. As long as the Bank of Japan is doing yield curve control, I don't want to sell this pair. But it just shows you how weak the US dollar might actually be because, trust you me, the yen is weak. But if this is coming down, then the dollar's even weaker than the weak yen. And remember, the central bank is trying to weaken the yen, but the dollar's even weaker. Wowzer. That's good. So it's a confirmation. Okay. And then Pig Dog here, once again, throwing warning signs. Okay. M2 predicts this whole red zone. So buyers down here are targeting this area. They had opportunity one to take profit. They now have opportunity two to take profit. So under these circumstances, prices can get heavy. The air is thin. The analogy I used yesterday on a similar situation, it's like holding a bowling ball above your head. Okay, it gets heavier. So, anyways, this is a concern price, okay, because it's a take profit situation. And of course, if they're all, if like if the other one currency pairs are going to come down, remember, not selling, it's profit taking. There's a difference. I don't think institutional investors are going to sell pound dollar. They'll take profit, and then the idea is buy it back later. Okay. That's why you get a move like this and this. Okay. Now, to highlight what I'm talking about, a move like this isn't selling. That's not sellers. That's not bears. It's bulls taking profit. And then what? Bulls buy it back at a lower price and do it again. In an uptrend, there are only bulls. Okay. Let me exaggerate to make a point. What kind of idiot would sell an uptrend? Not you. Your mama didn't raise no fool. So think of it that way. Nobody sells an uptrend. It's common sense. But you can get up, profit taking, up, profit taking, okay, and then sell it. Because bears only sell lower highs, right? So, anyways, so massive opportunity for profit taking, and the extreme, rarely ever seen extreme profit taking is way up at R3. And maybe we have that. Um, yeah, maybe we have that. Who knows? But the news to use today is today might be a profit taking day, and there are multiple currency pairs at such prices. So just be careful. We can also take a look at the stock markets. Okay. And I got to switch this indicators, custom biased pivot points, bullish mode monthly. Let's do our targets. This will price out our targets, right? And right, this goes right back to the training at investorbootcamp.com. This is a buying pivot, and this is the extreme target for the month, otherwise known as bullish profit zone aggressive. Okay. 4523.1667. Pretty precise. And so now that we're pretty much there, what's the potential of something like this happening over the next week? Because that's a long ways down. What's the potential? Well, it's a lot higher than it was yesterday. A lot higher. Will it do it? I don't know. It's probability. Okay. Does it matter? Well, if you're playing Russian roulette, yeah, it matters how many bullets are in the chamber. Yeah. Changes the odds. Well, the odds are not as good anymore. I don't feel good about this one, Sarge. Yeah. Okay. So anyway, so that's that. Just be careful. Now that's just technical. Fundamentally, the world believes inflation has been tamed and the Fed won't raise interest rates anymore. Okay. That might be true today. And so one of the things you're going to need to watch very closely over the next, even 6 months. If energy goes up, all this good news goes away. The UK just got their inflation reading way down. Europe, their inflation reading way, way down. In the United States, everything's right as rain. Everything the Fed did has worked. How do you know? Because inflation is way down. The only thing down is energy prices. So it has nothing to do with the ECB, nothing to do with the Bank of England, has nothing to do with the Fed. And so the market's claiming victory like our problems are solved. It's all over, everybody. Let's go, go, go. I don't think so, because if you look at everything else, X energy, we still have inflation. That's why you have core. And so for some reason, everybody's ignored core. So my concern with all this wonderful happiness, and I don't mind being happy. I just don't like happy people, but I don't mind being happy. But if we know from this analysis that if oil prices go up and gasoline prices go up, all this inflation is right back, and people are not pricing that in right now. With that being said, we have retail sales today. Inflation is down, prices down, gasoline prices are down. Americans spend a lot of money on gasoline, and that gets counted as retail sales. So if nothing changed, if every single American bought exactly the same amount they usually do, retail sales will be down, which is weird because it's a weird measurement. I've always thought it was a weird measurement because it's in price, not units, right? So you're like, wait, if everybody bought the same, then we're going to have a lower number? Yeah, because they needed less money to do it. And we saw CPI down, so look, retail sales must be down, right? So anyways, we're going to get a disappointing number there, and that might force people to do their profit taking. Now, speaking about NASI, okay, I set this all up, and be careful. This is not a pivot point, but it's very similar. Okay, we are at the extreme, by the way. There's the big extreme move for the week. I mean, look at the weekly target. I have to zoom in here because I'm on a 4-hour chart. The weekly target, 15,848. And we just tickled through that, right? But this purple zone is that top. So let's say people are surprised. Ooh, a low retail sales number today, profit taking. And will we buy it down here or will we buy it way down here? Well, we don't know yet. What's the strategic plan we've had lined up for, I don't know, the whole entire year? Let me put this to a daily. Okay. This is the plan that we've had highlighted. Okay. I thought this would come down to about the third week of August. Turns out it was third week of September. And it turned out to be the fourth week of October. Wow. But that's the target, anyways. And now we're back on to continue mission. We don't have a lot of room left. The best you could ever hope for this year is up here, 18,700. Well, right now we're at 16,000. Okay. So, okay. This top is very, very important, very, very significant. We're at this top now. There's another top. And then okay. Now, way up there. But anywhere along the way, if energy prices come up, inflation goes back up, the Fed starts talking about raising again. And yeah. Okay, just be prepared for it. Okay, you can have exuberance, just don't be irrational. Nothing has changed in the last 6 weeks in the United States of America, except fuel prices have come down. Okay, which is cool because today is Wednesday. You can go into the EIA and look at our inventory levels. So right now, you should probably know oil production is at an all-time high in the United States, and we're burning all of it. There's nothing in storage. Okay. Which means if anything goes wrong, one little hiccup anywhere in the world, geopolitically, it could be weather, it could be, I don't know, but just, dude, anything, anywhere at any time goes wrong. Oil prices go up. Okay. Like, oh my goodness. So, anyways, be cautionary. Today might just be a profit taking thing, and we buy it all back probably Friday or Monday. Just be careful. Okay, people have been holding the bowling ball above their head. Might be time for profit taking today. So, I don't really know, but the one thing I do predict, as I mentioned, retail sales will probably be lower, and that might be very disappointing to some. And that might force the hand of profit taking. And we have a down day, but nobody's selling. Cool. So, market calendars tomorrow at noon. QuantBox has an amazing announcement for you that will be Well, will make a lot of quant boxers very happy. And then the second thing is we have an opportunity to change the direction of the firm and take the service to another level. It just will take considerable investment of time and money. So the big question is, do you even care? And if the answer is no, then right, a waste of time and money averted. But if you're like, oh my God, I want this, I need this, I have to have it, give it to me, then we can get going. I've already started much of the work to ensure that if you want to do it, we'll do it. And it'll happen fairly fast because I've already laid all the groundwork. Like there's 2 people working right now as we speak. But if it's a waste of if it's a waste of time, I need to know, right? Yeah. So much suspense. Well, yeah, well, it's a big deal, right? It's a big deal. Honestly, it really is. So I'll make oh, let me give you that link. Is it still do I still have it? Paste. I do. I still have it. Okay. There it is. I will also send out an email. And so anyways, yeah, be there live. Okay, don't just watch the recording, be there live. Oh, somebody clicked it. You're not supposed to click it. No, that's perfectly fine. So there you go. So in 28 hours. Yeah, it's cool how you can remove it too, right, Adam? Right on. That was cool. Yeah. Nice advertisement, Adam. I appreciate it. Yeah. So, anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you soon. Cheers. Beep.